The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 10th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine. The number is 877-927-6648. If you can't call in, no problema. Let your fingers do the walking. Just send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den will. Any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got a flat market. The Dow is up 2 points. The S&P is back 2. NASDAQ 100 down about 0.4% or 24 points. Russell 2000 flat, trading up 76 pennies. Semis are not flat, down 1 2/10% off $15. New York Stock Exchange is flat, up $6. NASDAQ Composite down 1/4% at $16 to the downside. Gold's up about $6. Silver's up 2 pennies. Light sweet crude up 32 cents, trade out of 63.28. Natural gas back a couple of pennies. Leading the charge here to the upside, it is Intuitive Surgical up $23, up 6%, all-time highs, I believe there. Churchill Downs up $12 or 5%. Meta Financial Group up 11% or $10. Anaptes Bio Inc. Yeah, basically a butcher job there. ANAB, I got that right, though. That happens to be up about $8 or 7.5%. Sage, the Sage one, Therapeutics up $7 or 4%. To the downside, it is Equinix. Equinix EQIX off $12 or about 3%. Cinex Corp down $9, 6.5%. Domino's Pizza, serving pepperoni, red pepperoni down $9 or 4%. Mohawk Industries getting a bit of a haircut, down 2.7% or about $8. Of course, I could go through all this stuff all day long. We're not going to do that. Of course, I want to know what you want to know. That way I can take a look at it. So give us a call, send me an email, give me a ping, anything, just so we can get started. I'm just kidding. We're going to get started no matter what. I know somebody out there is ginning up a question in their mind, and they're saying, hey, Steve-O, got up this morning, futures are trading lower, figured the big old bear was in the room. What happened? Why did price stop where it stopped? What's going on out there? And that's an excellent question. So let's go ahead and begin. Thank you for asking that. If we go ahead and we take a look at the court of opinion out here, with the NQ, we'll start with the NQ. We'll look at the daily chart. And as price was pushing lower, somebody said, hey, I have a motion. Let's go test Stevie's red line. How important is that red line? Muy importante. Right now, that's priced at 66.29 and change out there. And we take a look at the low of the day. Where did price stop? And that's right, Stevie's red line. Then, of course, like in, any kind of quorum you might have, somebody says, anybody want to second that motion out here? And if we were taking, that was the motion for, hey, are we ready to crack and move to the downside? Well, a couple of guys, gals in the ES mini pit, they said, yeah, I second that emotion or second that motion. Is it emotion or motion? Second that motion. And what did the ES Mini do? Went down, tested Stevie's red line, 27.38. Look, the move, all that was going on today, all that was going on was a test of support. Now, that was the ES Mini. Inside the Dow, if we go take a look at the YM out here, we look at the Dow Equity Futures contract. That's really what it got down below Stevie's red line. How dare you get below Stevie's red line? A little doji. In fact, the futures are trading right where they opened as they reopened last night. Excuse me. So you've got no movement. You have now a doji. We don't know how this candle session is going to complete. What's a doji mean? A real doji, not a fake doji, a real doji. Real doji basically has no body out there. And that's important to distinguish from the fake doji, where you do have bodies. You see all these small little candles. If you're watching this on Tiger TV out here, small-bodied candles. You really want to get the doji out there, because it carries with it a certain meaning. That meaning, up at resistance, says that the market is tired or lost its way. That's the meaning behind it. Now, it hasn't lost its way when you test Stevie's red line and you move higher. Now, we can see here, if we do the old Chapman wave count out here, and you know that you and I are only, during the show, we're only interested in how this market sings in the key of G. So always looking for that seventh wave move, that seventh inning stretch out there. And if the high of yesterday is not taken out, no way for me to know if it will or it won't, looks like you would get that tomorrow. Something to think about. Now, it doesn't have to take place tomorrow. It could take place the day after. But I likely would suggest that it's forthcoming, especially if price just tests and rejects Stevie's red line. Inside the YM, that's at 25,296 out there. In essence, that's what's going on inside the market. Somebody's going to say, I know it. Well, why are you skipping that Russell 2000? All right. I heard you ask. Let's go take a look at it. If we take a look at the Russell 2000 equity futures contract out here, we're going to see that price was moving higher, doing a less relative strength over the last couple of trading sessions. Yesterday, very small bodied candle, so it was very easy to engulf the prior even smaller bodied candle. But all price did yesterday was just come down and test support. Today it got down below it, but we're trading up above Stevie's red line, somewhere probably around 1560. This does not look bearish either. That's what's going on inside the equity futures markets. And we did have a question that came in. How about that? That was Phil. We go take a look at Phil. Thanks for writing. Thanks for sending this in. Phil says nectar. He wants to go take a look at that sweet nectar out there. Sweet for him. NKTR is a ticker symbol. Why is it so sweet? He got in at 59.92. It's trading at 66.81. That's after getting into it yesterday. Phil, you must be a momentum trader out here. Don't know, but I can see where it broke above 60.77, the top of that daily profile, or 59.32, the top of that weekly profile yesterday, and it has been off to the race. Now, the question says, I bought nectar at yesterday at 59.92 and added at 60.80. Added 60.80. Okay, there we go. I sold a portion of 68.7N to lock in profits. There you go again. Clearly a confirmed A to B equals CD up, but wonder where you would have stops given your tools trying to hold it for longer term. So if you're holding it for longer term, I got to know what that means out there, because stops, what I would be looking at is the average true range. So when we come back from this break, I'll go ahead and populate the weekly and the monthly charts to give us their average true ranges, Phil, because we're going to go ahead and take those, multiply them times the Fibonacci expansion, and that, in essence, would be your stop. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're back on the horn. Let your fingers do the walking horn with Phil, who's in ticker symbol NKTR. That's Nectar Therapeutics. Got in yesterday in the $59 area. Has taken some of the profits off the table. And the question is, where would you place your stop? So what I added to the screen out here, the daily, the weekly, and the monthly, are the average true ranges. And so you would really, in theory, you would, and in practice, you would go ahead and you would start there, depending on your time frame, your outlook, what you want to use as an average range. I like to use the last 10 bars out here. Last 2 weeks trading session on a daily chart. 10 bars is going to be 2.5 months on a weekly chart, and on a monthly chart, you're looking at 10 months time frame. So you can adjust that accordingly, but that in essence is where you'd want to start. In the very bottom panel, it's showing you the average true range, the ATR, 392 on the daily, 590 on the weekly, 864 on the monthly. Now, what you like to do is, because none of us here in this room, on this show, anywhere listening in, are anything but extraordinary. And so we don't do average things. So, but we pay it. How do we make an average true range extraordinary? What we do is we multiply that times a Fibonacci expansion. Those expansions would be either, well, 1.272, 1.618, 2 sort of, but that's not really. Then you go to 2.618. So if you take 392, $3.92 times 1.618, it's $6.34. Subtract $6 from 66.95. You know, you're around the $60 range. You're somewhere just below your entry point in there. So at that stage here with something like this, I would say, yeah, it's probably your entry point or somewhere, you know, because you've already taken some profits off the table below that. Now, 57.43 is the bottom of its daily profile out here. 59.32, the top of the weekly. The monthly is nothing for us to consider. So consider those levels. It's about 635, 955, 1398, those being the different time frame ATRs times 1.618. The other thing, Phil, I'm sorry, it was Phil that had written in, and I don't know if you need to be aware of this, but this chart is singing in Stevie Wonder's key of G, and it's doing that today as we take a look at the daily chart. I don't know how this works. I just know that it works out here. And if we take a look at the swing point out here, that's the last time we saw this thing really trade back, which wasn't anything of significance, December the 7th. If we start doing our little wave count out there, what we can see is that today's action, actually yesterday's action, took it into the wave number 7. Either wave number 7 or wave number 1. We don't know. If you see it close below Stevie's red line at 64.45, well, then it starts to say, well, maybe that's wave number 7. There was the previous wave 7 came out here, by the way, although it's not labeled on December the 1st. You saw a pullback for about 5 days, 4 more days after that when it found that new candle that we're doing that wave count on. So, Phil, great trade. Nicely done, and best of luck with it. Doesn't look like you're going to do anything but end up in the money one way, shape, or form. Checking the list out here. No other requests as I see them. Hello, I'm referring to the Tigers Den, as well as all of you listening out there. Give me some. Send me in a direction that you want to take a look at things out there. That way the show is more useful to you. If we go tool around and take a look at what some of the indicators are communicating to you and I, let's go check in on the advanced decline oscillator readings. Interesting, as we speak right now, 1:22 p.m., we take a look at the New York Stock Exchange. That's where we start. We can see that it has thus far completed the 1 to 1.272, A to B equals C to the upside. 13,162 was the price projection. The high yesterday, 13,156, off by 6 buckaroonies out there. Now, we don't have really we don't have a bearish reversal signal, but what we do have is the advanced decline oscillator reading. That's the difference between, that's the advanced decline line, taking a look at the difference between the 19 and 39-day exponential moving average. That's what that oscillator is doing out there. Right now, it's below zero. Now, this may just be a one-hit wonder, and that's why we go ahead and we always are looking for confirmations. Confirmation or follow-through on the next trading session. But should the New York Stock Exchange finish its day below zero, and you'll see that the actual summation line, that's a little red and green, looks like a little Christmas, doesn't say Christmas colors, not a Christmas tree. You'll see it's turned red. Red tells you and I that oscillator reading is down below zero. So can price move higher when it's below zero? Absolutely can. But it's an indication of sellers being in control. Day one, we don't know, because day one, it just might be a false move out there. But day two confirmation, well, then, yeah, it would be saying something. So we have a completed A to B equals CD to the upside, but that's it. We have a bit of a warning sign out there, and we'll just simply have to come back to that mañana, tomorrow. We've got, I'm sure, an A to B equals CD to the upside inside the NASDAQ composite. And it's sitting just above the zero line. The reading right now about $12.90 out here. I'd say that we're going to defer to, that's in the NASDAQ composite, we'll really defer to the spot volatility index. And as we take a look at it, you and I, we just simply are focused on what? We're focused on that 50-day exponential moving average. And the key is an end-of-day reading. Is price above it or is price below it? Right now it's below it. Below so far, where we're trading at is 10.07. The 50-day is 10.17. You had a nice move yesterday inside the spot volatility index out there, but never closed above, didn't even test the 50-day line. Testing, no big deal. It's where does it close. We saw in the overnight action out here, and as the market opened this morning, we saw that spot volatility index shot up to a high of, I can't tell you what, 1085. I can't tell you, just have to look. 1085. If price had closed there, as long as that wasn't a one-day wonder, meaning a rate of change greater than 10%, then we would be saying, hey, it is these sellers that are definitely in control. I know we're at all-time highs. We're just reading what this tool and set of indicators suggest to you and I. At this stage here, what we're going to say is the New York Stock Exchange is nothing more than a one-day wonder at the moment. That's the reading as of 125. These tools here, the advanced decline oscillator line, is really an end-of-day tool, just as the spot volatility index is, at least for being able to pave the way as to answering that question. Hey, Steve-O, who's in control of the markets? We got a question that came in from Dano, and he says, thoughts on the GDX gold action today? Well, let's go take a look at it. Let's go take a look at the GDX. Let's do it as we do each of the equities that we take a look at with the three different time frames out here. So as we take a look at the GDX, here is what we know. We know that last week, let's go ahead and put this chart up on our screen. And what we know is price inside the GDX on a weekly basis is it basically been trading within a consolidation pattern since January 2017. This is January 2018. Yes, that's right. So the bottom of the consolidation is in the 21 level. We didn't actually get down there. This is a weekly chart. Back here on, let me get this data box so I can see it as well as you. We're taking a look at the week of December 11th. And that low out there only got the 21.27. No, still though, below the above the bottom of the consolidation. Dano, in order for GDX to get up to the top of the consolidation area, close to 26, I want to see all long people in the mining equity sector want to see a close above 23.77. I know that doesn't completely answer your question, but we're going to go to Ray in Sarasota. We get back from this break, and then Danny will follow back up for you on the GDX. But the bottom line is we're in a consolidation pattern at the moment.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're going to go out to Ray in Sarasota. I believe he wants us to play a tune from Creedence Clearwater Revival. So I'm up for that. Ray, thanks for calling. Thanks for holding. How are you today? Was that your request?
Yep, I'm doing well. So everything's great down here in Sarasota today. Beautiful day.
Perfect, perfect. So you want to take a look at
So,
Carbo Ceramics. That's a CRR instead of CCR. Tell us what you're doing, how I can
right.
help you.
I'm long.
Okay. And what? How can I assist you? What?
Well, I'm wondering if we're hitting resistance right here, and it looks a little toppy. It's an oil play. They do. I guess one of their main products is sand for fracking, and it's a more expensive, more exotic sand that they use. And when the price of oil is down, their sales go down with it because of the cost of their products. But I'm just seeing what your perspective might be on where we might be heading. It consolidated for a while down in the $6 to $8 range, and now it's recently consolidated around $10, and now it's pushing up against 12.
Sure. So what was it that took you into the equity? And for what period of time? So what was your?
Well,
when you got into
I'm looking at it. What got me into it was it came down so as far as it did, and I didn't think it was going to go out of business.
Okay.
So I figured it was a matter of time until the oil started moving back up that it would move with oil. And my time horizon could be anywhere from I've had it now for about 5 months, and I could have it for another week or another 5 months maybe.
Sure. So if we take a look at, you asked a question about resistance. Do I see resistance? And the answer is I don't at the moment. And I'm going to just start with the monthly chart out here. And we take a look at the monthly chart. If we really pull it back, it's just a horrible looking stock, basically, as you pointed out. But you said, hey, I don't think these guys are going to go out of business. They've got a good technology. And so you wanted to go ahead and begin a trade or investment in it. It would look to what stocks will typically do is they will, at least when they start to move up off of the bottom, they'll at least go test a high volume area where maybe this thing took off to the downside, or a previous swing point. Well, the previous swing point on a monthly basis that you should be eyeing is the month of February 2017. Now, there were 16 million shares when it traded into that area. We're only a partial way through January, so we don't know what kind of volume it's going to have this month. But likely, this is headed to the price range of 1281 to 1670. You're trading right now at 1171. That may or may not be resistance. That's the logical play with regard to resistance on a monthly chart. Now, when we take a look at the weekly chart here, what we're going to notice, this is a very positive thing for you, and I'm looking at the week of November 20th, 2017. This equity did 2.5 million shares that week, and last week you had to be loving it, not just because it was a nice wide-ranging bar, which is element number one when you pass a swing point or a B point here, and it did so, but it also did it with volume. So it was 2.7 million shares that took out 2.5 million shares. That's what we like to call a confirmed A to B equals CD to the upside. Now, when we take a look at a move like that, 60% of the time, an equity or whatever it is that you're trading is going to do a 1-to-1 A to B equals CD. That gives you a price projection of 1424. The other 40% of the time, it's going to do something more. That could be the 1.272 expansion, the 1.618. And these are ranges. They're not exact numbers that we want to take a look at, Ray. But those price projections are 1558, 1729. And when we take a look at on a weekly basis, the swing point that's very clear to us, it's the week of February 6th, beginning February 6th, 2017. And there comes back into play. In this case here, the range on the bottom side is 1495. That's the low, and the top being 1670. It looks like to me that Carbo Ceramics is headed to that area. And if it does that and you experience some pullbacks along the way, are you in at a good enough price to sit those out?
Yeah, I am.
Okay. Because we're trading above. Now, there's a brand new market profile. Just so you know, are we in a little bit of maybe, you called it a consolidation. It's way too early to suggest that as the case. We've been trading sideways for 4 days out here. Today, you have a brand new set of market profiles. The top is 1210. The bottom is 1098. If this were to pull back, you'd expect it to find support at 1098. You're at 1172. That's not the end of the world, and it's definitely not the end of the world because of the way that price moved above its swing point both on a daily basis as well as on a weekly basis out here. Once this clears the 1210 area, then it's free. You've just gone beyond the police. If you're in Sarasota, you're driving down I-75, you probably know as you drive that area, maybe where they're occasionally hanging out. And once you get past them, you can kind of open it up again. That, in essence, is what Carbo Ceramics is doing on the daily basis. And you've got the police stationed at the 1210 area and hopefully a lot of support and buyers at 1098. Does that help you out?
That's very, very helpful.
Okay, perfect. So thanks so much for listening. Yeah, best of luck with that trade. Always keep a stop in place, but sounds like you're off to a great start. That was Ray in Sarasota, and that was Carbo Ceramics. Now, Dano was asking about the GDX out here. So let's go take a look at the GDX. Let's go ahead and put up the old CC. I did put CCR out there. And it's probably not CR, right? But that's this chart here. I'm not worried about that. So let's go take a look at the GDX out here for Dano. And here's what we really like, Dano, about the GDX. Now, yesterday's action, not so much. In other words, we have been anticipating, you and I, that price would pull back to Stevie's red line. Right now, that's priced at 23.25. Yesterday, price actually gapped down below. But that price oscillator, bottom right-hand panel of our screen, is above zero. All that says is price could pull back even further. Price right now is above the 23.25 level. Back above that says this could be the C point of a very large A to B equals CD to the upside. Don't know if that's how it's going to play out. If we take a look at that price projection, though, okay, should that unfold, this is going to give you an uno to uno, 1-to-1 at the 25.54 level. That's likely not where it would stop because it's only a 30, it's less than a 0.382 retracement. So 26.23 would be game and even beyond that. But now you want to see price continue to close above 23.25. If we go take a look at what's really controlling, in essence, the direction of gold, that would be the direction of GDX, the miners, it would be gold and silver. And if we take a look at Goldilocks out here, what it did overnight, and this was earlier when price was higher. What it did overnight was price came back, and it did this in gold at 1 a.m. Silver was at 10 or gold was at 10. One of them was 10. The other was at 1 a.m. Either way, at 2 a.m., price bounced off of Stevie's red line. That's what you want to continue to see out here. But the test that we had been anticipating appears to me to have occurred out there. The old test of Stevie's red line. That's for Dano inside the Tigers Den. Of course, I want to hear from you, just like we heard from Ray in Sarasota. And so you're next up. Either let your fingers do the walking or give us a call, 877-927-6648. Dow's up 7, S&P is back 3. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the next request that came in through our Tigers Den, Mike K. And Mike wanted us to take a look at WPM, which is Wheaton Precious Metals, formerly known as Silver Wheaton out there. And as we take a look at this stock chart, we're going to look at it really with the three different time frames, right, to give us a good visual with regard to some of those barriers or support levels, those being the horizontal blue line. So you got daily on the left, weekly in the center. You've got monthly on the very right-hand side. When we take a look at the daily, we see the prices are below support. Support would have been 2184. We got below that a couple of days ago out here. You're trading at 2104 right now. If we take a look at the weekly, weekly says, hey, you're above resistance, which would be 2005. And if we take a look at the monthly, it says it found resistance, the top of its box. That is priced at 2211. So that's what the profiles are telling us. So we've got one says we're at resistance. Another says you've got to break out with a pullback maybe to 2005. And then you have the daily that says, shoot, I don't know. You've broken through support. I don't have any kind of a feel for where you're headed to. You're trading back into, let's call it a swing point from perhaps November 10th out there. The low is 1987. The top is 2112. This is at 2104. As long as you are closing below 2112, man, that says, Mike, it can go down to the bottom. Now, if we go take a look at, where did we do that? Where did we do that? Let's put this on a, let's get this to a daily chart. Let's get rid of Carbo Ceramics. Let's put WPM. This is Stevie's other set of tools out here. And we take a look at it. What this is also suggesting to us is, one, you're trading below Stevie's red line. 2193 is that number. Is that a good thing or a bad thing? Basically, it's a bad thing. We just looked at the GDX, the larger group of mining stocks out there, which instead showed that it is now trading above Stevie's red line. So the entire sector, and I don't know if I think Silver Wheaton was in it. I'm pretty sure that it is. That Silver Wheaton must be one of the weaker stocks inside the GDX. So I don't know if you're looking to be long. If you are long, I don't know what information you're looking for. Since I don't know, I would just say this blanket statement. If you're looking at an individual stock, why would you choose Wheaton Precious Metals, WPM? I mean, we'll go take a look at one that you should consider looking at because it has a more bullish setup. Now, support very well may be right here, the Stevie's red dash line at about 2082. But if that's not it, where price is likely pulling back to is in the 1996 type area, maybe even more. So it looks like Wheaton Precious Metals has got some problems. Let's take a look at another stock out here. It has copper in it. Thank you. So, so you'd go take a look at copper. We'd go do that. But as we take a look at for another stock ending in M, That would be AEM right there. So let's go take a look at Agnico Eagle. Here, if we take a look at what it in essence did yesterday was tested Stevie's red line. Right now it's priced at 46.27. When the price oscillator, very bottom panel of our screen, moves above zero, what you're really looking for is how is price and the oscillator unchanged line. We like to call that Stevie's red line. It's just a whole lot easier to say. We like to see what happens when there's a test. The test is price in that red line. Does price, in essence, bounce off of it? Does it find support there? As so many times, equities will find support or resistance. In this case here, AEM gave you a bullish signal yesterday. Says it's ready to move higher out there. And you might say higher to where? Well, in the case of AEM, where it should move to is up into the 5182-ish type range out there. So with regard to copper, and thanks for that info, Mike, let's go take a look at copper, and let's see if we can go over here. Let's see if we can pull up copper. And I don't have, unfortunately, the synthetic contract version of that, but that's okay. We'll just simply go take a look at the March contract for high-grade copper and try to get a feel for what it's doing. Dr. Copper out here. So copper, Mike, has found support thus far on a daily basis. It's been testing out the bottom of its box, which is 323. It actually closed below it for 2 days for the last couple of days. But today it's back above 323 out here. The top of the weekly box is also, in essence, a support area. That's 324. So even though this has copper, not this, but Wheaton Precious Metals has copper in it, it looks to me like Wheaton Precious Metals still weaker than what it is that we're taking a look at, here in high-grade copper. And anyway, you also want to take a look at ticker symbols. So let's go do this. AAOI. So as we take a look at it, this looks ugly. Applied Optoelectronics. This looks really ugly. On basically every front that's out there. Here's that. So this looks like, to a certain extent, or could look like a Bitcoin chart, right? Where you go, in this case here, this went from $10, really went from 808 up to over $100, $103. And it did it in a short period of time. The number of months, May of 2016, all the way up to July of 2017. So it did it in 14 months time, give or take out there, where it did, what did it do? It did 10 bagger out there. All right, so it's not a Bitcoin, but it's a style chart that you just don't want to see out there, making a run like that and then coming back. This was what they would refer to, Mike, as kind of a phase transition, and and that just says that this is coming back to where it broke out. And if we take a look at where this thing broke out, well, you'd come back and take a look at, I'd look for the low volume bar out here. That would be December of 2016 on a monthly basis, 6.5 million shares. So as I look at Applied Optoelectronics, this says to me, look for the area of about 2290 to 2626. This is still at $35. Now, we should see some confirmed A to B equals CD patterns higher. So let's go take a look at the weekly chart. And the weekly chart, the A point, well, let's first see, was the swing point crossed with volume. 8.6 million shares the week of September 4th, and that was passed with 17 million. So yeah, we can say this is a confirmed A to B equals CD to the downside on a weekly basis. The price projections that we get here, 2301 is the 1-to-1, and 988 is the 1-to-1.272. So I'm going with the 1-to-1 level at this stage here, 2301, probably not too far away in essence from the price we looked at on the breakout on the monthly basis out here. Looks to me like this still wants to head lower. Now, this did have a bullish weekly session out here on November 6th, and the low of that is 3670. You're trading below, not you, but the stock is trading below that old support on this equity should become new resistance. I don't know. This is the first week of a test of that. But that was not the right spot. Why didn't it grab the right spot? I'm going to put a red line across that level out there because you can write that down on your pad of paper. Mike, if this closes below 3670, I don't care if it's with volume or not. Probably won't be with volume. But if it closes below that, old support will become new resistance, and 2301 will be gain. That's what I see on applied optoelectronics. The only thing that could change our mind is maybe some type of AAOI, maybe some type of signal of price moving lower, doing less relative energy as it is right now, but no bullish reversal signal. So, Mike, lower until proven otherwise. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's up 12, S&P is off 1. Hey, speaking of applied optoelectronics out there, this is a long shot, but my question for any of you out in the audience, any of you have any contacts at some of the observatories on the Big Island in Hawaii? Would love to find somebody who's got a contact at the Keck Observatory. You know, you can get up there, but you got to know somebody in order to be able to get into one of those observatories. And you know, they're sponsored by a number of different countries. Caltech is the one that's got one of the better sets of telescopes that are up there. But if anybody has a contact or think you have a contact, please send me an email, steve@tfnn.com. I would much appreciate that. So what are we going to do here to round out the last couple of minutes? With regard to the markets, still bullish formation. The only thing that's taken place today is just a test of support, and that is Stevie's red line. We saw that inside each of the equity futures contract. If we take a quick spin here, let me pull up my daily indices sets of charts. If we take a look at the New York Stock Exchange, well, So the New York Stock Exchange, the one that's giving us a signal of, hey, what's going on? But when we also pull up the chart, meaning the advanced decline information, we also pull up the chart, we can see that today's low was nothing more than a test of Steve Bear's red line. Now, the exact number as we speak right now is 13,062. You know how that changes throughout the day out here, but nothing more than a test of support. So even the weakest link, as you and I have taken a look at it today, the trend continues to the upside. It's got to prove to us otherwise, and it would be the same case out here. If we take a look, how about the NDX 100? I think yesterday we talked about the 3 drive to a top pattern out here. One of the things to just be concerned about, and you got and look at all that price did today so far has come down and test Stevie's red line, 66.18. So the trend continues, my friends. And that trend says, hey, it's Wednesday. And you know who's up next? Your favorite polar bear, my favorite polar bear, everybody in this world's favorite polar bear. That's David White. And then you got everybody's favorite Obi-Wan Kenobi, Tom O'Brien from 3 to 5. Have a great Wednesday. We'll see you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.